So when you are looking into it and you're like, oh, am I accredited or not? You can ask yourself a few questions. So first and foremost, for high net worth individuals who are getting into the kind of private equity space, looking to invest in things like that, think about okay, well, what about my income, right? And so that's to Angela's point. If the income question is okay, do I make $200,000? Have I made that in the last 2 years? And then if the answer is no, if you're married, ask, is your spouse are your spouse and you making over 300,000? It's when you're looking into these type of investments, it's a lot easier when you are making that kind of money. But even if you fail, it doesn't matter, right? So net worth is something where people think, oh, $1 million net worth, that's daunting. It's out of reach. A lot of factors can play into that. So yes, your primary residence can't play into that, but any rental properties, any assets. So anything from like I said, property, but also all the way down to like your 401k or any retirement plans, your stock portfolio, anything like that, any sort of accounts, financial institution, all of that. Also, maybe your income isn't super high. Maybe you're in a different part of life and you just have $1 million in cash in the bank. That also counts, right? So it is a lot simpler. At the end of the day, though, the best recommendation from us we are not tax professionals, right? We could put that in big block letters at the bottom, like we would, but it doesn't really matter. Speak to a tax professional, a tax attorney, and a CPA, an enrolled agent, etc. I mean, I think even TurboTax, services like that, they offer those type of services included in their plan. So, getting a certification letter is fairly straightforward. There are also services online. You submit some documents. If you fail, they ask you to submit more documents, or if you just fail straight up, that's it. It's a simple no. There are investments, though, that are open to non-accredited investors, right? They're going to be a little bit different. Maybe the return profile is different. Maybe the risk profile is different. But the most important thing is that you're comfortable with what you're investing. With every type of investment, any investor relations, any sort of salesperson who's worth their worth their salt will tell you, hey, the biggest risk is you lose all of this.